Well, I think what we're dealing with right now is something very similar, but it's also telling us the magnitude of what may be happening and what's going to happen is going to be greater than 2008.
Hello, everyone. I'm Olivia Voz, host of Alternative Edge Report, and you can call us Goldstradamus because we've been updating you on the massive moves we've been seeing in the alternative market, especially in gold. So today we are bringing on the president of Neptune-GBX, Chris Blasi, to give us an update. Hi, Chris. Thank you for coming on.
Hey, Vaz, great to be on with you. A lot of exciting things happening.
Exciting is an underwhelming statement. I mean, we have seen the market absolutely roll over, and we've been seeing a lot of other investments pick up. So I wanted to bring you on today to talk about gold. I mean, we've just seen an absolute massive run to the point where the GLD ETF is gapping up. People are thinking, is this going to get away from us? A lot of people have been thinking that the move is more of an because of the uncertainty in the market, and they're looking at gold as a safe haven, or is this more of a warning, Chris?
So that's a great question, and you really have to step back and appreciate that what a macro view gold gives us and what a macro asset it is, right? So what's happening with gold now, this has been a culmination of what's been going on for 20 plus years, right? This secular bull market in gold started in 2001, 2002, and here we are in 2025, and it's getting people's attention. But when you talked about, is gold kind of a forecaster of where we're going? And I think it is. It's always kind of done that role. Let's just roll back a little bit. Prior to the 2008, 2009 financial crisis, when everyone was saying we're in a real estate-based economy, and everyone was making a fortune in real estate, and everything that was going on in the mortgage market with ninja mortgages, and we had the leaders, people like a Ben Bernanke, who was chairman of the Fed at the time, saying, worst real estate would do is trade sideways for a while. Well, for the years prior to that, gold was running up, and gold was running up because it was calling that out, and it was right. It basically was telling us that a trouble was coming up, and we had the 2008 financial crisis. Well, I think what we're dealing with right now is something very similar, but it's also telling us the magnitude of what may be happening and what's going to happen is going to be greater than 2008. And there's also other activities in this market that is adding to the level of that warning. And I'll give you just like one example. Prior to 2008, a lot of what we'll call big time investors that were going to hedge and use gold, they were comfortable using derivatives. Right now, we are seeing an unprecedented level of exchange for physical. And this is with big investors, right? Because what's also interesting, I need to put in here, in the last 2 years, retail investors have not been big players in this market. So in this run up in gold, this has been being driven by central banks, sovereign wealth funds, and very big, well-heeled investors. And they have no problem paying $3,200, $3,300, $3,400 for gold. So this is not by what you would call the unknowing, reacting on emotions retail investor. This is the big money players. And unfortunately, most of retail is sitting this out. So I think it's telling us, regardless of what kind of pullback we've had in the stock market and other, difficulties that we're experiencing in the bond market and such, gold is telling us there's more trouble ahead.
Yes, and the fact that you say that retail investors actually are kind of ditching paper, and now you see a lot more interest in bullion, definitely piques my interest there. When you say that gold is kind of looking at this scenario as a warning sign, are you discussing tariffs? Are you discussing some sort of other uncertainty? What exactly is the warning sign for?
So it's telling us that from my perspective, the global markets are breaking down, right? I think people see that looks like there's going to be recalibration, a realignment, or a reset of of macro markets, financial, trade, even the relationships and alliances between countries. And when something of that magnitude is on the precipice, really the only safe haven is gold and at some point silver also. But right now, the players who are piling in are the central banks, are sovereign wealth funds, are very large investors. They tend to go to gold, not silver. I mean, they will. Central banks, of course, don't go into silver. And that's why we're seeing this move in gold. But the magnitude and the rise of gold and these, what you would call in the money or in the know buyers who are comfortable paying for bullion at these prices, that's very bullish. And let's also back up. I have said for years that, and not just myself, but others like myself, that this time was coming, right? The unsustainable debt was just one thing, and it's not just with the United States, but the international system was setting up for this. And one great example is the fact that the BIS, the Bank of International Settlement, the central banks of central banks, several years, just over the last couple of years, has reclassified gold from a tier 3 asset to a tier 1 asset. That means it puts it on par. The central banks of central banks puts gold, physical gold owned, allocated on the same par as far as risk as cash and treasuries. So they didn't do that without a reason. And I think they fully knew where we were heading to. And now you're seeing that move into gold away from treasuries. And that's, this is monumental. And that's why what I think is coming and is right in front of us is going to be more dramatic than in 2008. And there's very few assets to really find safety in except basically gold and silver.
Yeah, Chris, I mean, as you mentioned, we've seen this 20-year run up to this, and obviously they know something's going on in the undercurrent leading up to it. However, you can't really predict that there was going to be, tariffs and a trade war. Well, I guess it depends who you ask. But now that we have this, people are using that as a reason why the market is selling off and why gold is getting a bid. You and I both know there's a lot of under factors, but let's say they come up with some sort of amazing trade deal, the market takes off. Can gold go back to lower prices, and can that take the interest out of gold?
Sure. So tariffs aren't the reason why gold is doing what it's doing. As I said, the in the know players, the central banks and such, they've been preparing for this for years. Now, the tariffs add uncertainty. It can, add to maybe accelerating the rise. And of course, most of the mainstream will just attribute the move to gold now because of tariffs. If we come out with a good tariff deal, yes, you may see a little bit of a pullback and consolidation in gold, but that's not really the ultimate driver. The drivers for gold are far bigger than just the tariffs. It's almost like tariffs are a symptom, not the real problem. Okay, so yeah, maybe a little bit of a pull up, but gold will resume because the bigger picture items, the bigger matters, right? Basically the destruction of the fiat currencies, the devaluation of the fiat currencies, and the world's move toward a better store of wealth, right? Again, the ultimate central bank making gold the tier 1 asset, a tier 1 asset. I mean, that's not going to change. So, maybe it'll provide a nice buying opportunity for those who haven't gotten into gold yet or want to add to their positions. But, a few months down the road after that deal, it would really be insignificant, and it's not going to halt gold's rise.
So the show isn't over for gold, as we've just established, but it doesn't necessarily mean that gold is going to continue to explode at the way that it's been going. It seems like you see there is some room for it to go higher.
Well, I think so. I mean, look, it's moving at a tremendous pace. I'd actually love it to slow down a little bit. I do not want to, you hear people who like gold say, hey, gold, 5,000, 25,000 or even higher. I'm not looking forward for that happening anytime soon. I'd really prefer a slow, gradual rise year over year. But I think we're going to now have yearly gains that are going to be far greater than what we experienced over the last 7, 8 years. It's going to be more like in 2003, 4, and 5, and 6, when we had gains of 20% or more year over year several times. So, yeah, from a technical perspective, it's just blue skies. There is no technical resistance. The other thing people will say, oh, gold is too high because this is a new high. I think that's a very not well thought out argument. Especially, I remember when I got into this business, back in 2002, our first trade was $289 an ounce for gold. And the quote unquote conventional wisdom back then was gold could never breach $800 because that was the previous high, which of course really made no sense. And that's where we are now. The plight of the fiat currencies, they are going to continue to deteriorate. We're going to end up with more money printing, regardless of the so-called savings that are being achieved through, reduction in employees and programs at the federal government level. The amount of debt that needs to be refinanced at higher interest rates are going to cause great stress on the markets. So yes, there's more upside for gold, not just in this year, but in the years ahead.
Yeah, it sounds abysmal, but not for gold. And like you said, you have some more interest in bullion as well. I mean, if you go back and you could look at gold's chart all day and can make the argument, well, if it wasn't too high then, why do you think it's too high now? It definitely looks technically driven to continue to go higher. But for those that do still have FOMO and may disagree with us, Chris, how about silver?
Mm-hmm.
Because that one still has yet to take off. Do you have an update on silver's predictions and price action?
Sure. I think the amount of frustration that silver causes for investors is just monumental. You're talking to investors all day long. That gold silver ratio as of yesterday was at 105, which is just, almost at a historic high. It was a little bit higher in a very brief period of time during the COVID crisis. But silver will eventually take off and catch up. I mean, one of the drivers, again, that is a differentiator is central bank buying has been a huge driver for gold over the last several years. Central banks don't buy silver, right? So their demand isn't there, but silver will catch up. That gap will close. Now, and I don't think it's going to close by gold dropping dramatically to have a gold silver ratio that's more in line with historic levels. Historically, it would be around 40 ounces of silver to buy an ounce of gold. And as I mentioned a minute ago, it was at 105 yesterday. I think, it's going to be silver really rising to kind of close that gap. And I think when silver starts to rise, the nature of silver, once it breaks through like 35, you're going to see it move rapidly up toward 50 and then beyond. And there are analysts, and this is why a lot of silver investors are excited about its future. They see ultimately with massive market dislocations that are probably coming down the pike as we have this global reset and global realignment and new trade deals, is that you could possibly see a gold silver ratio in the high single digits. That would be phenomenal. I think will be very achievable to ultimately be at, 20 to 30 to 1.
Wow. So, like you said, that gap will become closer, almost to the tune of double digits. Chris, it's so great to have you back on the show. Quite a lot has happened since you've been on, and your predictions have been really great for our viewers. So, we thank you.
Thanks, Voz. Look forward to talking to you again real soon.
Can't wait. All right, everyone. And if you are just coming across us for the first time, I highly recommend looking back on our previous videos. We have been on target with gold updates and other alternatives for you to follow along. Make sure to like and subscribe so you don't miss future episodes.